Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
All right, let's have some general rules for how I do this myself. I select time frames for my entries, and I usually use a daily, weekly, and monthly chart. Okay, I pick daily, weekly, and monthly charts because weekly charts, I really only have to focus on one open, high, low, and close. Okay, a monthly chart I use just to see if I'm trading inside or outside the prior month's range, which could indicate early on the beginning of a new trend. And of course, I use a daily chart just to try to select better entry points. I define the top of my range using a horizontal line. If I see a couple of highs that are pretty similar or a couple of lows, that's usually all it takes to draw the horizontal line. Okay, same thing with the bottom of the range. And then I like to price my calls out anytime I come down to near the bottom of my range. And I also like to price out the puts when I get near the top of the range. So as long as I stay inside that range which I've defined, I should be okay. What will happen is as price is rising, my calls, if I want to sell calls, for example, the calls above the top of the range should be getting expensive, but the puts near the top of the range will be getting inexpensive. And again, if you are going to be buying options, you do not want to pay too much for them. And if you're going to be selling them, of course, you want to take in as much premium as you possibly can. Okay, so just for a simple strategy of buying calls and puts, when you're coming down to a trading range bottom, price out your calls. When you're coming up to the top of your trading range, price out your puts. Okay, but always select a place to exit the strategy if price happens to break out of the trading range. Some people define a breakout of a trading range as just a push through the top. Other people like to use a close. If you're trading on a weekly chart, it's going to take a whole week for a close to actually confirm that you've broken out of a trading range. Okay, that can be pretty expensive in the option world, so we're going to talk about a couple of strategies to actually try to cut that risk down a little bit more if we possibly can too. Let's look at our first chart here of the new Australian dollar. This is the dollar versus the Australian dollar, our US dollar versus the Australian. And we see here on a weekly chart, which most of these screenshots you're going to see here are going to be weekly charts. We see here that we are trading at this point when I took this screenshot, which is around the last week of June, that we were trading in the 107 to 104 trading range. Okay, so obviously a simple strategy would be just buy your 104 calls when you're down near the bottom of this trading range. If you do a reverse and go back higher, you can buy your 107 puts when you get towards the top. Okay, so again, we're not going, at this point right now, we are not going vertical anymore. We have started to go horizontal. Okay. Possible exits for this strategy like that would be sell all your calls or puts if the price of the option declines by 50% for a stop loss. So if you do not want to take a break out of a trading range and you start to lose money on there, and of course preservation of capital is a key thing that you'd want to do, you could close your trade for a 50% loss. Dr. J, the famous option trader, that's one of his hard, fast disciplines that he always uses in the stock market. Another thing you could do is sell all the calls or the puts if the price of the option increases by 100% for a quick profit while you are inside the trading range. Don't forget, a lot of times time is working against you too, and if you're buying calls, time is one of your biggest enemies. So if you do have 100% profit, might be a good idea to exit. Okay. However, if you put on a larger than one lot or two lots, you may want to take a partial profit at some place on a double or at the other end of the trading range. Okay. And again, the larger the range, the more logical a strategy like that would be, and the larger your account, the more this kind of strategy would be possible. Okay, and depending on the time frame, use a close above or below the trading range as a technical stop loss. At that point in time, I'm not trading horizontal anymore. I'm starting to go vertical, and I need to immediately, as a range trader, recognize that and cut my loss. Okay. Now we're going to talk a little bit about selling calls and puts. Some brokers, this is going to be harder to do than others. Okay, it can be simple or it can be advanced. You would sell or write your puts far below the bottom of the trading range. Okay, you could sell or write calls just above the top of the trading range. And again, if these strategies start to break out of the trading ranges, if price starts to move against you, what you need to do is you need to buy those back in, because the position will be wrong and they will start to cost you money. Okay? So for example, I took a shot here of the British pound in the spot Forex market, GBP USD, only to show you that it is possible for these prices to trade in ranges for long periods of time. We're talking about a couple of months, and here you're looking at a chart where the pound stayed in a range between about 140 and about 170 from 1993 all the way up to 2004. That is a option writer's paradise. Okay, if you can write calls above that range and write puts below that range and have price do exactly what you see it doing on that chart, that's what you strive for in the option markets. Okay, nice way to get paid while the market's doing nothing. Okay, so here is our British pound, and we can see that we had a nice trend move down and a big snapback rally for the dollar, and then we started to trade here sideways for quite a bit in this little trading range between 140, well, let's say 49.50 and 51.50 approximately. Okay, so where are we going? We're not going anywhere. I want everybody to notice, though, we're kind of making higher lows over here, as I can see on this chart. We're starting to stay above a moving average while we're inside that trading range. And again, no matter how bad the news is for the dollar, the gentleman who taught me this, Stan Weinstein, said you'll find out many, many months down the road about the good news that caused the dollar to break out long after it's left the range. So you have to respect the fact that at this point in time, when I took this screenshot at the beginning of the month, there was a possibility for some kind of a dollar rally. Okay, and if that were to happen, I must close that trade out once I get above that top of that range. Okay. Possible exits, again, for this kind of strategy are pretty similar to the other one, to where you can buy back your calls and your puts if you lose more than 50% on it to preserve capital. Trading capital is the key to this. Okay, we can't stay in business if we don't have anything to trade with, so protect the capital. Okay, you can sell it for a profit or a loss. Sometimes you'll get the 100% profit again, and you can take that for sure. Buy back a portion if you have a larger position on a double, and exit the balance of the position at the other end of your trading range. And again, a close, if it's a smaller time frame than a weekly chart, a close negates the whole thing, and look for a breakout into a trend move and exit this strategy immediately. Okay. All right, there are advanced strategies which I'm going to cover in my next webinar, which is going to be, I guess, September 23rd. So I'm only going to briefly touch on a couple of ideas here. These are advanced strategies, and strangles, straddles, spreads, butterflies, condors. Okay.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.